All right, guys, I am back again with another video. And before I get started on this video, I want you to please look at this disclosure statement that's here on the screen. And please do understand that I am not an investment advisor. Everything I do and show today is for educational purposes. So if you decide to take upon anything that I am talking about today, please do consult with your own personal financial advisor so they can help you to understand and consider the relevant risk factors when trading the markets. All right. So before I get started, guys, you know I always have to give you a word from the Lord, give you a word of encouragement. And today, our word comes from Psalms 119, 143, which says, "Trouble and anguish have taken hold on me, yet thy commandments are my delights." So basically, this says to me that we do endure so many troubles and anguishes throughout the day, throughout our lives. But even though we face those troubles, we still have to live the commandments of our Lord and delight in those commandments. Because see, we can have anguishes and we can have troubles where those troubles make us go out and do things that we shouldn't do. You know, go against the word of the Lord, go against what we should do as Christians. And that's when you're not delighting in God's word. So even though you face troubles and anguishes, you still have to live the word of God. You have to go vertical, trust in his word, have faith in what he offers you and take it from there. But if you don't do that, you're doing your own thing, you're doing your own will, you're doing your own way, and you're trying to please yourself rather than please God. And when you're trying to please yourself, you can't please God also. All right? So hope that was something that touched you and helped you, my brothers and sisters. So God bless. So let's get with this thing. So first I want to talk about the tools that I am going to be using today. So first thing you're looking at on this chart is the VIX. So the VIX is known as the CBOE volatility index. All right. So it measures market volatility, and it's a measure of the investor sentiment. All right. So the sentiment of traders. So it's like the fear gauge or the fear index. All right. And it's basically calculated by the Chicago Board Options Exchange, and it's using the prices of options on the S&P 500 index. So basically this VIX, when I'm looking at the VIX, because it's going to be a tool that I use to get into these trades. So I'm going to show you these trades and then I'm going to show you the live trade. But when I look at this VIX, I never want to be going with the VIX because the VIX is inverse to the market, right? So if the VIX is going up or down, so like in this case, if the VIX is going down, then I know the market is going up. So therefore, I will not go against the direction. I will not go the same direction as the VIX. I will never be trading the same direction that the VIX is going when I'm trading on the daily time frame. So also with the VIX, you can use this on any time frame, and I'm using it on like a 2-minute chart, 2-minute time frame. So you're able to use that on a 2-minute time frame, a 5-minute time frame, 15-minute time frame, hourly, daily, whatever. All right, and you'll be able to use it. So using it on a daily time frame will be a little bit different, but not so much different. It's still going to be inverse, and you're still going to see things. But I use support and resistance levels, and I use it even on the 2-minute time frame. But yeah, the VIX is going to be something that's very important in my trades, and we'll talk about that. And then there's another tool that I'm using, and that's going to be the NYSE tick. All right, so I am using the NYSE tick, and the NYSE tick tells us how many stocks are trading at their offer price minus those trading at their bid price. All right, and it's a measure of short-term sentiment. All right, it captures the degree to which the market reflects the aggressiveness of either bulls lifting the offer or the bears hitting the bids. When I trade with the tick, I know that I am trading with the strength of the smart money. I'm trading in the direction of the smart money because the smart money is going to be the only money that can move the tick. All right. So basically what you're looking at here is you see this is the tick, and this is on the 2-minute time frame. So the tick, unlike the VIX, you cannot use it on higher time frames. It's only for daily time frame trading because it's only calculated during regular trading hours. So you can't use a daily time frame, but you can use like an hourly, 5-minute, 2-minute, and so forth. And so the tick has these levels, and this is your 0 level. All right. And then you have this negative 600 level, negative 800 level, and the negative 1000 level. Then you have a positive 600 level, positive 800, and positive 1000. So when it ticks above the 600 to 800 level, we know that only institutional traders, institutional participants can make the stock hit tick levels like this and move the market in that direction. So we know that's the smart money moving the market. And when we see the tick trading between the positive and negative 400 area, we know it's possibly like a ranging area. So when it's trading between this level here, or we're trading between here to here, we could be ranging in this area. All right. And a lot of times these represent oversold and overbought levels, basically. Okay. Because when you see the tick move up into these areas where I have this mark, so I marked my chart like this. I put these zones in here. And when you see the tick get up into, especially this 1000 level, when you see the tick hit that level, then you know the market's really, really overbought. And there's enough possibility that we can see a decline. And that's what you see happening. You see this rejection. Once you see that on this chart, then you pretty much can be looking at your chart and you'll kind of know what's going on with the market. Then we get down to these levels. So since the market was trending to the upside, you can tell it was trending to the upside because we barely get to the negative 800 level. We keep bouncing around off of this. The lowest we get is this negative 600, but we kind of stay in this range here. So around this 300 area, and we just continue to stay in this area here, letting us know that the market is trending more to the upside than to the downside. Because if it was trending to the downside, right, then we would see this tick staying more so below this 0 level here. And you would probably see it not hitting much higher than these 200 to 300 levels, but it would stay mostly down in this area. And then we would know we were trending to the downside. So the tick is not inverse to the market. The tick follows the market. So this way I know I can follow the VIX and the tick. So let's look at the trades that I took first on the chart and then on the live trade. So looking here, this was my first trade. I'm going to tell you why I took this trade, but basically I took this trade and you could see I only made two points on this, but the main thing about this was I kind of felt this could be a support level here. And I thought maybe we might not get through that level. And if I wanted to give the market a chance, when it pushed down to here and then pushed back up, I got out of the trade and then it finally came down and closed here. Eventually it turned around. It never went below this level. And there were some things that helped me to see that and understand that. All right, so this is where I entered the market. Let's look at my entry and we'll talk about everything else. So let's look at why I entered. What I'm looking at on my chart, I'm not looking at this. This is my trading platform. So I'm trading on the Quant Tower platform. So, and if you want to trade the Quant Tower platform, look in the comment section below, and I have a affiliate link that you can get a little discount on. You can use the Quant Tower platform, but you can also use it for free. But if you use the free version, you only get, I think it is 2 indicators, but you can also use your copy trade with that for free. So you can have a copy trade and you can trade all your accounts on there. But the thing about this is where I entered the market. So let's take a look at what I was looking at. I look at the chart that I'm about to show you, and then I come over to make my trade here. And all I do is click and boom, I'm in my trade. So let's look at what I was looking at that point. So what I was looking at that point, this is where the market we were right here. All right. So you could see the VIX is this upper one. It's moving to the upside. Therefore, I know the market's moving to the downside. So I'm going to be trading short all the time. I'm never going against this. And I do have 2 moving averages on this chart. And whenever these moving averages are like when the green is above the red, I know that the VIX is moving higher. I'm not going to go against that. When I see a nice pullback, then I can see a move to the upside. Then I know that I'm getting a nice short opportunity. But what you'll see a lot of times is a gap. So I watched this. This is where we were. And then we gapped a little tiny bit. And then we gapped up even more here. This is where I got into the trade. All right, so I got into the trade here. And what also got me into the trade, so remember, when this gaps up, the market's going down. So what also got me into the trade was looking at that gap. I also see the nicey tick reject off of this upper zero level. So see, all the way back, the market opened right here. And ever since the market opened, it was a bearish market. You could see where I drew this resistance level, but also the zero level. The market was not able to get above that zero level. The tick was unable to ever close or get above that zero level. Therefore, I knew this was a very bearish market. So I'm looking for a short opportunity. I had this rejection here. So as I saw that rejection, so these two things I saw this, the rejection, and then I saw this gap up. This gap up means the market's moving down, and I also saw the rejection. And if we go back to the chart, we can see what it was, what we were looking at that point, and where we entered. And you can see this is where I entered because we saw those two things that I talk about. And that gave me confidence to take this short. Now, again, I got to this level, and I don't show it on my charts, but when I look at the nicey tick, right? The nicey tick, actually, you can see it right here. We went down to this level here, the negative 800 and almost the negative 1,000. And remember, this is a possible reversal, and that's why I got out of the trade for sure, because I can tell that that level was going to hold as a support and resistance level, as a support level basically. So therefore I got out of the trade, and that was all I was able to profit with. But again, that was a $500 trade right there, and that was my first trade of the day. So I made another trade of the day, and I'm going to show you that trade, and then we're going to go live with the trade. I'll show you the live trade. This was my next trade here. So the next trade, I'm going to show you why I got into the trade. But first of all, we had a fractal level over here. You can't see it. I didn't show the whole chart there. But we had a fractal level here. And then the market went higher and came back to this fractal level. Here I was expecting a bounce, and we did get that. You could see the price action. We got a nice little price action opportunity there. But I wanted some confluence. I wanted something to give me some surety of my trade. All right. So what I looked at was this. So again, remember, we're going long here. And again, I did have a resistance point here, a double hot top here, quite possible. So let's have this multiple highs right here. And what I wanted to do was see if we could get through that level. And if we couldn't, then I would take my profit. So what I was looking at was this. Let's see exactly what I was looking at and why I took this trade. So what I was looking at now, the market is going to the downside, right? I mean, the VIX is going to the downside. So therefore, I know the market's going up. This was exactly where we are. This was exactly at that time when I took the trade. And when I saw this candle close, and then this candle closed like this, red, with a big drop down, then I knew we were having a nice push to the upside on the market. And that was the candle where I got in. And also, the tick was bouncing off of this zero level. So the tick became bullish, and from this point here, it was unable to close below the zero level. It bounced off of the zero level here, and it bounced off of the zero level here. When it bounced off of that zero level, that was my signal to get into this trade. All right. So therefore, I got into the trade. Let me take you back to the trade and show you again. And then when we look at this, you could see right here, I got into the trade. That candle right here was showing you this right here. Let me go back again. Remember that candle, when I see this candle right here, I'm going to show you what I was seeing on the VIX and the tick. I was seeing this and this bouncing off of the zero level, and it dropped on the VIX. That drop on the VIX. So all this VIX right here to the downside, I will never trade with the direction of the VIX. I will always trade opposite this VIX. All right, and you could see this means the market was bullish, and the tick is showing you the market was bullish. Right, it could never really close below that level there all this time, as this is coming down. So therefore, I'm going to short again because this was a correction. and then boom, back to the downside. I mean, sorry, the VIX goes to the downside, but the market pushed to the upside. So I don't want to confuse you with that. All right, so that's what we got there. I think that's everything. Let's go back to this and let's go ahead and look at the live trade that I took. We're going to look at the first trade that I took. We're going to look at that live. So let's go to the chart. Let's go to the live video that I had, and I'll talk you through the process that I was looking at that point. You're not going to be able to see the VIX and the tick. You're just going to see the trade because I look at multiple screens and I was recording the screen where I took the trade. So therefore, you're not going to see the VIX and the tick, but I just showed you what it was doing. All right, so let's go to the live trade. All right, guys, so this is the live trade. This was the first trade I took of the day. So again, I took 2 trades this day. The first trade is this trade right here. This trade ended up being $500, and then the trade I showed you, that was also a $562 trade. So I ended up having $1,062 for the day. And basically, I'm going to show you what happened here. And I was actually looking at these levels. So I wanted to see if the market was going to push up to this point or push up to this point. We had some liquidity levels in here, so we thought we might see some liquidity grabs, might see the market grab some liquidity, then drop, but it didn't never come up that high. All right, so we didn't see that take place. So remember, on this trade here, what we were looking at basically was, remember on the VIX where we saw the VIX moving to the upside, and we had the one green candle, and then we had another green candle that gapped even higher. This was the candle where I entered the market on the VIX. And on the tick, remember we had the red candle that rejected the upper level, and we took the trade at that point. That's these 2 things we saw. So this was the VIX and this was the tick. So I showed that to you previously. And so that was the determining factors for me getting into the trade, and I'm letting it all just play out. All right. So that's what I was looking at as this chart moves on. You're going to see I'm going to move it forward a little bit. So you can see we get into the trade shortly here, coming up. This was the candle we were looking at, waiting to see it close. This is going to tell us what we were going to do, and we were looking at the VIX and the tick at that point. And when we saw what we did, you could see my hand on that market about to close. 17 seconds when it closed, I clicked that candle. I clicked that market order, and boom, I'm in the market. So we'll let that close. We'll show you that. Click that, boom. So this is about to close. Got my hand on that market because I'm watching the tick and the VIX. And I know what I want to do if I see the candle show me the price action that I want to see. And therefore, I'm getting ready to click that. Boom. I'm in the trade. Here we go. In the trade. All right. Then we can see this candle play out. And I don't think I captured the whole trade on here. On the video anyway. Somehow I think I shortened it. But we could see where we are. When this candle closes, we're about 3 something right now. Ended up at 5 something because we got out down here. And we didn't get this whole trade in. But yeah, that's what we were getting. So that's the trade right there. I don't know how the video didn't record the whole thing, but I didn't get the whole thing on there. And this is where we are. That was the trade. We talked about it. So hopefully, guys, this stuff is helping you out. Guys, look in the comment section. And if you want to become a Apex funded trader, you're going to see an affiliate link there that will give you a little discount if you want to become an affiliate. If you want to become a trader, Apex funded trader, try to get that account funded. Also, If you want to start trading with the Quantower platform, again, I got another affiliate link down there. You could start looking at that Quantower program. And then, guys, if you do like my content, please do subscribe, do click the like button and comment, and I'll answer your questions if I can. And other than that, guys, hope you enjoyed it. Until next time, have a great one. God bless. So long.